Hi guys, today I want to talk about a counter trend trade strategy. I'm calling it the G5 strategy. And this is why. So basically, it is a combination of two things. I call it the G for gold, being this gold baseline, and then the 5 comes from the 50. All right. So this is a trend reversal strategy. It helps you to identify trade opportunities at the high and low of the day, possibly. Not always guaranteed, but at the high and low of the day. Okay, so let me find, let me find a place where this is true. All right, so let's see what we got here. We have okay. Here's one. I got the 15. So basically, it's a counter trend trade. So, like for example, here at the high of the day, you have at the high, right? Make sure we take note of that. This price at this point in time, boom. Let's investigate this place here. Let me put a shape around here. All right, let's investigate that. So at this place, at this point, this price right here, 41.30, right? The baseline is closer to the high than the 50 moving average. The 50 moving average is underpriced action at that point in time. All right. So what I've noticed is that when the baseline is above price, at the same time the moving average is beneath price, that is a high possibility. There's a high possibility of price coming back to the moving average or going down, and vice versa. All right. So this one, you see price begins to go down. Okay. Where we at here? Let me go ahead and enter another trade. Keep on entering. All right. So now at the same time, this is for the sell. For the buy, it'll be the same thing. You'll have this one suffices because this is a situation where they both are at price at the same time. I want to give you an opportunity to look for one. Now, mind you, these are counter trend trades, which means they are short lived. They are not long term. Okay, these are not long term, but these are trades where you can get in and get a few pips and get out to help you maximize your trade profits in the correct direction. These are counter trend trades. All right. Sometimes within the trend itself, you always will have moves against the trend within the trend. All right. All right. Here is one. Right here. Very small move. Okay, but it's valid. So at this point in time, right here, let me put this shape here. I have to zoom in some. At this point in time, price is closer to the baseline than it is to the 50 moving average. How do I what represents price on the TDI? The RSI. Okay. So if you notice, price and the RSI take on the same shape. Right? So the RSI represents price on the TDI, just this green line here. At that point in time, price is closer to the baseline than it is to the moving average, indicating that price will go up. Now, mind you, like I said, this is a counter trend trade. So you're not going to get a major amount of pips like you would get going in the trend. Right? This is what? Let me see if I can zoom out a little. This is about 400 pips. Now, mind you, 300 pips. This is only because gold is volatile. If gold wasn't volatile, it'll be somewhere between 50 and 80 tops. Okay? This is only because gold is volatile. But the point is, there are trade opportunities. Here's another one. You have counter trend trades with the end of trend, and then you have counter trend trades that shift the trend. This trade shifts the trend from bullish to bearish, right? Which means you can get more out of this than you could out of this because you're buying in a bearish market, right? So you wouldn't expect to, you don't expect to get a lot of pips that you would normally get moving in the trend, right? So you got two different opportunities to use this strategy. At the high of because even this is at a high place somewhere. So let me get rid of this one. And what else? There's another one somewhere. This one too. All right, let's go to a bigger time frame. All right, this was a high, more like a retest of a previous high, support to resistance. This was a retest of that, right? So this one trade would have brought you 2,300 pips. Okay, so I think we're having. If I look at it right now, we're having that same kind of situation right here in our current time. As you can see, let me see, go up. As you can see, where we are in time right now, we have price being closer to the baseline than it is the 50 moving average. Okay, if it's still going up, I know it's still going up. But even with this one, price is closer to the baseline than it is to the moving average. Now it may be a heads up for a possible trend change, but as it stands, the market is still going up, possibly to retest these highs. But if you want to, like, even here's a perfect example. You got a retest of a high, but you got the baseline, the gold baseline above price, which is the RSI on the TDI, and the 50 is way down here, which is a sign that price will go down. And it goes down, that one trade would have brought you over 3,000, over 3,500 pips in that week alone. And I mean, obviously you could have had, it would have been more because it continued to go down. But from here to here, which is a 4,600 pip move, just by getting in at the high of a move that was realized by what I call the G5 strategy. The G5 strategy. G5 down is a sell, G5 up is a buy. G5 down is a sell, G5 up is a buy. G5 down looks like this. Gold, the baseline is above the moving average. Okay, so you take your point. If you're not sure, you take your vertical line, put it on the spot. The RSI represents price on the TDI. So if this is price, if this represents, green line represents this, the baseline is above price, which means the baseline, if it was drawn on price, would be up here somewhere. Whereas 50 moving average beneath. Okay, that means it's going down. G5 up means price is going up. All right, so what does that look like? That looks like the baseline is under price and the moving average is above price. Okay, so here's one. G5 up. Baseline will be here somewhere. All right. G5 up. G5 meaning the gold from the bottom, the 50 moving average on the top, prices are going to go up. Okay, that's really all I have to say. I mean, it's all around. Okay, now when you see them symmetrical or parallel going in the same direction, then that's obviously you're trending at that point. But just look, you can just go through and see times where here's one, G5 down, The baseline is above price. 50 moving average beneath price. Price drops. Okay. Here's another one. Baseline above price. Moving average under price. Down. Baseline above price. Moving average under price. Price goes down. That's really all there is today, guys. But I'm gonna post this to my YouTube channel and then post this to the page. If you have any questions, feel free to reach out to me. But yeah, the G5 strategy. All right, y'all have a great day.